Hi, it's Dale Beaumont here. I'm with Kathy Ewers from Inc Wealth, and in this video, we're going to talk about how to use your super to buy your first home. If that's you, keep watching. So Kathy, why would we use our super to buy our first home?
Right, well, actually in 2017, the government introduced some new regulations to help first homeowners get into the property market. So that was off the back of the housing boom during 14, 15 and 16.
Or housing crisis, as some people called it.
Yeah.
Which is basically making it affordable for people to get into the market. So what did the government do?
Right, so first of all, they introduced that you could contribute a certain amount of money into your superannuation fund above your normal contributions. And then these funds you can pull out at a certain time, and then you can use that deposit towards your first home purchase.
Now this is different. We've done another video before where we spoke about how to buy a home through your self-managed super fund or your SMSF. This is different, right?
Yes, this is completely different. So an SMSF is a separate entity that you set up and you are managing your super yourself.
Okay.
This is just your super through your normal retail or industry fund.
Yep.
So what the government has brought in is that you're able to now contribute up to $15,000 per financial year into your super, additional above your PAYG super contributions, and up to a total of $30,000, Dale. So in other words, you could contribute $10,000 per year to reach your $30,000, and that's a cap of $30,000.
Okay, now I understand you got an example, so do you want to take us through this example with some real numbers?
I do. Okay, so here's how it works in real terms. Let's just say you've got a client with $60,000 worth of income and they salary sacrifice $10,000 a year. The after tax, because you pay 15% tax within the super environment, is $8,500. So if you do that for 3 years, plus you get a little bit of return on investment, you've got approximately $27,380. So we've used an average return on investment.
Okay.
And then to withdraw it out of the super environment, to use it for your deposit, there's another small tax that applies.
Okay.
So in this instance, it'll be around about $1,600. So this is how it works. You've now got a deposit of $25,760 towards your first home. Now, you've made a savings of around about $6,000. And the reason you've made a savings, Dale, is A, you've used the tax advantages of your super at only 15% to put it into the super environment. Remember that the super environment has better returns than a normal savings account. So a normal savings account is, say, 2%, even a term deposit is 3%, whereas the superannuation environment, you could be earning up to 4, 5, 6%, depending on how it's invested.
And when we're talking about getting taxed at 15%, that would be opposed to the 30, 40 or maybe even 46 or 47% if you're on the top tax bracket, right?
Absolutely, yep, that's right. So, and that's where the tax advantages come in, only paying that 15% tax, yep.
Okay.
So let's just say you've saved around about $6,240 in this instance, but just say you've got a spouse and you're both doing that. You've now got $51,520 deposit towards your first home. And also, let's not forget that if you're contributing the $10,000 per year out of your salary, so your salary was $60,000, you've now contributed $10,000 pre-tax into your super, you're only now being taxed on $50,000. So there's tax advantages there as well.
All right, this is pretty exciting. So if someone's interested to find out more, who do they go to? Do they go to their accountant or do they go to a finance professional? Who's the best person?
Okay, so it's a very rounded question. It depends. I think you could see a financial planner or your accountant concerning this to get a little bit of advice. I guess it would depend on who you're closer with. And then when you're ready to actually buy your property, that's when you come and see the broker and they can put you into your first home loan.
And you actually offer a review where you can sit down with someone and look at their entire strategy and to give them some advice on what's the best way to go.
Yep, absolutely. And in fact, some of our clients that we've already sat down with, and it's a forward strategy. We're waiting, we've got sort of a 2-year plan, and they already know how much deposit they need and what their income needs to be. And so we've actually set up a whole scenario for them.
So this is a really important point. So you shouldn't just wait till you're ready to buy the property. You could actually start the preparation for this. You're saying at least a year or maybe 2 years in advance. Is that right?
Actually, mentally, if you can start the process early and get a plan, you have a whole lot more chance of success because it's in writing, you've seen someone, it feels very real with what you're doing, and you'll probably see that come to fruition in a couple of years, yes.
So Kathy, in relation to this scenario, what's the bottom line? How much are we better off?
So if you and your spouse are both saving and contributing to your super, in this circumstance, with this scenario we've got, you can be about $12,500 better off.
All right, fantastic. And where does someone go to find out more information about this strategy?
So you can come and see your broker and get a whole lending scenario completed for you so that you know exactly what you need to do, how much deposit, and it's a really good goal for you to work towards. And also, if you've got a relationship with a financial planner or accountant, you could also consult them about this as well.
And the sooner you start, the better, right?
The sooner you start, the better. I've got clients that I've already seen, and we have a plan in place, and it's a 2-year goal.
All right, fantastic. So that wraps up this video. For more information, then follow the next steps.
If you want to discuss your financial needs with someone you can trust, visit inkwealth.com.au and claim your obligation-free 15-minute phone consultation today.